Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a shareholder report, and I hope you're ready for a wild ride because I guarantee, just like my last attempt to bake a cake, things are about to get a little messy. We are looking at the Bain Capital Equity Opportunities Fund Annual Shareholder Report. It sounds pretty fancy, but what does it all mean? This report gives us a peek into how the fund performed, what it invested in, and what it cost investors. First off, this report covers the period from late October of 2024 through the end of February 2025. You can think of it as a report card for your money, except instead of grades, we have returns and expense ratios. It says right up front that you can find additional information on the fund's website, and you can always call them too. Let's talk costs. Imagine you put $10,000 into the Bain Capital Equity Opportunities Fund. The report tells us how much it would cost you to have your money there. For Class 1 shares, it's about $134 or 1.35% of your investment. For Class 2, it's a bit more at $159 or 1.60%. It's like paying for a gym membership even when you don't go. You're paying those fees regardless of whether the fund makes you any money. It's super important to keep a close eye on fees in funds like these because those fees will eat into your returns. Okay, how did the fund actually do? Well, not great. The fund generated a net return of negative 1.30% for the period ending in December 2024. The report makes a comparison to the MSCI World Index, which was only down about 0.03% during the same period. It also mentions how markets pulled back, especially in December, and that the fund's core sector exposures, which are the kinds of areas they tend to invest in, were broadly negative. The managers chalk this up to a market pullback. They also go on to say that they took advantage of the market's volatility. They bought up positions in areas like industrial electrification and AI infrastructure, and they believe the market for self-help opportunities will improve. It's kind of like when a store has a sale, they are trying to pick up stocks and bonds at discounted prices. Let's see how that negative return looks with $10,000 on the line. A $10,000 investment in October 2024 would have shrunk to $98.70 by the end of December. By comparison, $10,000 invested in the MSCI World Index would have gone down just a tiny bit less. If you had invested that 10 grand into the S&P 500, it would have actually increased in value by a bit. Digging a little deeper, we can see some averages. Since its beginning, the Bain Capital Equity Opportunities Fund shows an average annual total return of negative 1.30%. The MSCI World Index shows negative 0.03%, and the S&P 500 Index shows a return of 1.26%. As the disclaimer says, though, past performance doesn't mean future success. Here is the financials everyone wants to know about. The fund's net assets sit at about $1.3 million. They hold about 30 different investments, and the portfolio turnover is 39%, which means the fund is actively buying and selling its investments. How does the fund distribute its investments? Nearly all, 96.1%, is in common stocks, meaning shares of different companies. The rest, 3.9%, is in money market funds, which are like super safe savings accounts for institutions. Taking a closer look, the largest slice of the pie is in industrials at 32.4%. Then comes financials at 23.3% and technology at 14.1%. They also have investments in consumer discretionary, consumer staples, communication services, and money market funds. It's like having a little bit of everything in your investment basket. Alright, let's take a look at the fund's star players. Rolls-Royce Holdings is their top holding, making up 7.5% of the fund's net assets, followed by Liberty Media, which owns Formula One, and Performance Food Group. Other names in the top 10 include Halon, Arthur J. Gallagher & Company, DSV, Burlington Stores, Crane Company, Cadence Design Systems, and KKR. These holdings give you a sense of the types of companies the fund is betting on. The report claims there were no major changes to the fund during the year. So, what does all of this mean? Well, it looks like Bain Capital's Equity Opportunities Fund had a rocky start, but they are still very new. Their performance was below average. They seem to understand the fund costs and seem to be adjusting it. Whether this fund was a good investment for people to hold, I can't say. One thing that is notable is their investment strategy. It is great to see them diversify and hold onto different industries for the long run. Ultimately, you need to do your own research and make your own decision on what works for you. That's all for today's Corporate Decoder. I hope you found this breakdown helpful. If you did, please like, comment, and subscribe for more deep dives into the world of finance.